We become what we repeatedly do. Sean Covey. And my friends, do you repeatedly, day after day, spend 10 to 15 minutes in the market to become a charting master? Well, if you do that, you will succeed. If you don't, if you hit the market occasionally, looking for quick little tips and a way to make a buck here or there, not going to happen. I'm the first to tell you. You've got to stay in the market every single day to learn the nuances. There are no shortcuts. There are smart ways to doing things. And that is filling out your daily market worksheet once a week, your weekly market worksheet, and your trade worksheets when you do your practice trades. And after a certain amount of time, and only you are going to be able to determine that based upon the skill set, how hard you practice, and how smart you are and good you are at getting this down. But I can tell you some of the best traders I know have the least amount of formal education. They know they don't know, and they trust the charts. What gets us in trouble over and over again is thinking we know more than the charts and that we can somehow make the price move toward us rather than cutting losses and, again, following what the charts are telling you. We've got a great training for all of our subscribers today. It is a training entitled Stop Analysis Paralysis, Limit Your Indicators. I want you to have that one if you subscribe, which you can do for free at chartingwealth.com. It's in your training today. It's in your show notes, along with all those PDFs on the daily market worksheet, trade worksheet, and weekly market worksheet. Those are available for free, and it costs nothing to subscribe. So let's jump into these charts. We see a big up day for stocks. S&P 500 up 1.77%. Nasdaq 100 up 2.13%. Bonds, consequently, are down. And look at gold, up about 0.5%. Let's first jump into the S&P 500. We had a weekly vertical crossover going down back on the week ending the 25th of September. What's going on? Last week was sort of a hum week, up some, but a little green candle. This week starting off with a big up candle pushing higher than when things started moving down. What's going on? The derivative oscillator still heading down. Price percent oscillator on the weekly chart is flat. We go to the 2-day. What do we see there? We see, again, we had the candle representing Tuesday, Wednesday, green up candle. Thursday, Friday, that was an up candle at about the same spot as far as the peak. But look at what we see on Monday. Things are zooming up. And again, this is just the first day of the latest 2-day candle. How will it end on Tuesday? Don't know yet. But look, price has pushed through that weekly trend line. So again, you know, it just continues to move. Don't have a 2-day crossover going up yet, but that may be soon enough. Derivative oscillator heading down. We'll continue to watch. Don't call that until it actually happens. What's up with the half-day chart? We saw the half-day spring up, then down, and then back up again, moving ever higher. So we'll continue to watch, see what there is to see here and what there is to learn. Are we going to have somewhere around, are we going to have maybe a ceiling somewhere around where it popped up before, somewhere around that 333.21 mark? Don't know about that. We'll continue to watch and see what there is to, the 341. Yeah, that seemed way too low. 341 mark or so. We'll sure see. But again, things are swinging back, lots of volatility. We'll watch and see what there is to see in this market as things continue to move forward. 2-day still hasn't crossed. Weekly is flat. Look at the S&P 500 up 2.13%. We had a nice drop the week after that weekly vertical crossover. That was the week ending the 25th of September. Then up last week, moving up this week. Again, not as much as you see. You saw where the peak was last week, up at a high of 282.88. Where is it so far this week? A high of 280.49 on the first day. Price percent oscillator still heading down a little bit. Derivative oscillators just about flat. Go to the 2-day, we can see that it's a little more than flat, heading up. Some derivative oscillators still negative, but barely. Of course, blew through the weekly trend line on that 2-day chart last Wednesday. And we see where things, again, not reached the high in the prior 2-day candle, but again, up for the day. So we'll watch, see where things are. Again, remember the 2-day and the weekly are still down on both the S&P 500 and the Nasdaq 100, but lots of up movement, lots of penetrations of trend lines. What do we see on the half-day chart? We can see where things peaked back in the afternoon on Thursday, down hard on Friday, and then trying to pop back up, but not as high yet. So again, we still have a negative bias on the S&P and the Nasdaq 100 on the 2-day and the weekly. So we'll continue to watch and see what's going on here. What is happening? What will happen? So again, remember the power of the weekly vertical crossover. Until we have that 2-day to take us away from it, we'll continue to keep the negative bias. But by all means, of course, what do you play by? You play by your profit and loss bands that you set whenever you enter a trade. So we'll continue to watch and see. What do we see on 20-year bonds? Up almost 2% down almost 2% for the day, the complete opposite of the up movements we saw in the stock market. And how's the week starting off? Strong down. We see the price percent oscillator kinking over, going down, derivative oscillator gaining downward momentum. First day of the weekly candle, a big, strong down move. We go to the 2-day. What do we see there? Again, first day of this latest 2-day candle going down strong. Look at it roll over. Remember when we talked about that 2-day crossover on Friday? Well, guess what, my friends? That was pretty good to you, was it not? If you jumped in on that, we talked about it, and that was, of course, an opportunity for those of you interested in going short on bonds. TBF is, of course, the single short bond fund, and you can see it springing up quite nicely as bonds went down. For those of you not familiar with inverse funds, I'll put the inverse training at the end of today's video for you. Inverse funds, how to make money in your practice trades when markets crash. And you can see that the price is completely different than the price on 20-year bonds. Why is that? Because it's a different fund, but guess what? It's set up to move in the opposite percentage that bonds move themselves, that the underlying ETF does. We explain it more in the video. Please watch that. You'll see a link to it at the end of today's video. And I think you'll find that quite enlightening. So it gives you another option along with puts when things go down. And if you want that put training alert to all of our Patreon members, we do have this Wednesday, 12:30 Eastern Daylight Time, our live Q&A session for our Patreon members. Don't miss it. If you want to get in on that and become a Patreon supporter, guess what you get with your Patreon membership at any level? You get the 3-part options made simple, the Charting Wealth way. So sign up and you can join us this Wednesday. And we want you to email us your questions, Patreon members, along with the stocks and ETFs you want us to help you track for practice trading. Okay, that is where we are on the 2-day. We see on the half-day chart slamming down in the morning, further down in the afternoon, just continuing to move down quite strongly. That is beautiful to see, is it not, my friends? We do need to redraw our 2-day trend line. We will make an effort to do that right now. That's what's so beautiful about the charting software that we use here at Charting Wealth. It is provided by the Warden Brothers. It is TC 2000. If you don't have it, you are missing out. And again, have a discount. Follow the link in the show notes. We'll save you $25 if you subscribe. Okay. And again, I'm using the web version, which allows me to pull up my charts on any computer anywhere in the world I'm traveling. Lastly, we look at gold up for the day, 0.49%. What we see gold really doing is, again, it's sort of sliding sideways. Price percent oscillator still heading down, derivative oscillator going down. We go from the weekly to the 2-day. You can see the derivative oscillator is losing downward momentum. Price percent oscillator flattening. This going into the 3rd day of up movement. Again, still have that weight of downward pressure on gold. What do we see on the half-day chart? It has been moving up since it crossed over, going up back on the 29th. Up in the morning, not quite as high in the afternoon. So that's where gold is. That's where we are with all of our charts. Markets never disappoint as far as exciting. That's why we follow the charts, not the noise. God bless, my friends. Take that training. Can't wait to talk to all of our Patreon members on Wednesday. We'll be back with you tomorrow as we are every day. God bless. All the best from the whole team at Charting Wealth World Headquarters.